Good morning, April the 14th. It's a Thursday, Good Friday tomorrow, so there will be no analysis. So I'm going to take the day off. I'm sure you are too, if you are enjoying the long weekend. Been a good week. We've had some good trades. We've had some small losers. We always do, but we've had some really good winners. Dollar yen was actually a small loser yesterday. We seem to have pushed up through now. This multi-year high, the 2015 high, was at 125.85, and we're pushing up through there. Yesterday we got as far as 126.30. We pulled back a bit when the Bank of Japan indicated that, well, basically what they're saying is they don't want any further weakening in the yen, I think, or at least that's how the market took it. Now, we could just push a little bit higher. Maybe we need to squeeze out a few shorts. I'm not sure, but this is let me see now, this goes back to 2008. So this is a 14-year trend line, and that comes in around the low 120, mid to low 127 area. So that for me is now a big resistance area. As you know, I put it all on the trade sheet already. So that is on the cheat sheet. Let me go back to the daily chart now. Aussie yen is in a triangle pattern. As soon as it loads, there we go. You can see the triangle pattern. I could actually put the trend lines on there for you. This is what I see as the pattern here. And I'm just going to wait for it to break. So if the yen starts to strengthen, as it could well do quite soon, then this market could start to turn lower. There we go. So there's your trend line, and you can see that we've got a nice little triangle pattern there. I'm going to wait and see which way it breaks. I'm not going to try and guess, but we're getting towards the apex of that triangle. So one way or another, it's going to break eventually. I think probably to the downside, as I say, but can't be sure. Aussie dollar. We've been trading 100 pip range up from 74.00 up to 75.00. I've suggested this for a number of days and it's worked beautifully. So let's just keep doing it. Longs down at 74.00, 73.90 works really, really well. We've already seen a good 60, 70 point pip recovery. So we're heading towards the resistance level at 74.90, 75.00. We'll see if we get a high for the day there, as we have done a few times this week, a couple of times this week at least. Now, Euro US dollar, I did talk about the market eventually collapsing as far as the 108.50, 108.00 area. That's exactly what happened. We've got now what is probably a double bottom in place at that big support level. So I'm really happy that's worked out well. We waited patiently for the buy level. We should all be in our long positions now, and the market's bounced nicely. Not quite a bullish engulfing candle. That would have just been the icing on the cake. But I think we have got a good bullish candle there, a good green candle, indicating a likely double bottom for a buy signal, and that's all rosy for our longs as we bounce off the 5-year trendline support. Worth running those long positions, I think. The Canadian dollar, another good one, managed to pick the high for the week, and what a beautiful bearish engulfing candle we've got there, bang on the resistance level, bang on our sell level. So we've got at least 100 pips in the bin on that so far, and actually I wouldn't be surprised to see this market continue lower. So if you are still short, you're probably going to see a little bit more profit out of that trade today, bearing in mind that pretty big bearish engulfing candle and rejection of the strong resistance levels. Where else can we go now? Dollar yen I've looked at. Gold I'll look at. I like to look at it, as I say, every day. I've got no idea what to do with it. We're trickling up. Some of you have asked me, should I sell? Should I sell? And I've said no. I really don't know what to do with it. When I don't know what to do, when there is no clear pattern or signal, then I just leave it alone. There's no point in trading it for the sake of it. Nasdaq creeping up towards the resistance level at around 14,400. A little bit of a bounce back in the stock markets, but I don't think it's going to last too long. S&P is already hitting that resistance level around 44.40, so we're testing it. Overrun a little bit, but I think as long as we stay below sort of 44.65, the outlook remains negative in what is probably a developing bear trend. Actually, this could be one huge head and shoulders pattern. So actually this trend line is not relevant anymore. Let me take that one off. But if we put this trend line on here, then we can see this could just be one very, very big and very, very worrying, if you're a bull, head and shoulders pattern. So this would be the left shoulder. This whole thing would be the head. And actually we've got a head and shoulders pattern within there as well. Don't forget we had this head and shoulders pattern, which we did quite well when we shorted it and shorted it back on the rebound. So, well, we'd have to break 4,000. That's where the neckline is. But if that does happen, that would confirm what looks like a pretty big head and shoulders pattern. We had something like this in 2007. I was trading then. I was advising banks like Deutsche Bank, Morgan Stanley, Merrill Lynch, Bank of America. And I said to them then, this looks like a big reversal pattern and the market could crash. They didn't believe me. And when it happened, they couldn't quite believe it. And of course, the stock market's dumped 50%. We'll see if it happens again. Obviously, we're a good 450 points away from breaking the neckline. So we don't want to jump the gun. But I still think that we're testing a strong resistance level as I speak. US 30, the Dow Jones is moving in more of a sideways direction. Not quite showing the negativity of the other two. Holding up relatively well, actually. Now, let's have a look at some of the UK markets. The FTSE 100, the spot, the cash. If I remember correctly, we had a bearish engulfing candle there. We did indeed. So this is quite important. We made a new high just about, there we go, a couple of days ago, and reversed and closed below the previous close, or the open actually. So I'm going to call that a bearish engulfing candle. I think really we should close below the low, but that looks pretty engulfing to me. So this is also a potential big double top there in the FTSE. You can see that nice V-shaped recovery, bearish engulfing candle, looks like a double top, pretty negative, I think, for the FTSE. I also, Germany 40, one of my favorites, bouncing back towards resistance at sort of 14,200 area. We'll see if that one holds. Certainly is holding as I speak. That's pretty much it. Crude broke the resistance level yesterday. That continued up to the next target of 104.5, 105.00. So we'll see if that holds. It certainly is at the moment. That seems to be the high for yesterday for crude. I think that's all the interesting points I have to make. Let me just have a quick look at my trade sheet. Yeah, I think that's everything that I wanted to say for today. So again, I think we've had a good week. Not quite the 2,000 pips perhaps that we made the week before, but the market's been a lot quieter, to be fair, especially with this big, with the long weekend ahead of us. Good luck if you are trading today. Otherwise, I'm not going to do a video report tomorrow. Most of the markets are closed anyway. I'm sure you won't be trading. Enjoy the long weekend. We'll chat again on Monday.